Hello folks, welcome to another edition of our free masterclass video series program. This is episode 3. Now, if you haven't watched episodes 1 and 2, I will strongly advise that you do that first before you come to this very video. Okay? Reason being that in the last 2 episodes, we laid the foundation for the concept of the smart money. Okay? So if you haven't watched those videos, please go watch them. I will put the link in the description. Okay? Now, in today's video, we want to talk about external and internal range liquidity. Okay? Now, before you talk about external and internal range liquidity, I want you to understand that I've given you 3 guidelines. I'm going to give you 3 guidelines that you'll follow on how to correctly determine your external and internal range liquidity. All right? The first guideline is that number 1, you need to identify your trading range. That's the key, number 1. You need to identify your trading range. And number 2, then you can now identify your external liquidity. And your external liquidity is any liquidity resting outside of the trading range. And then you can identify your internal liquidity, which is any liquidity that is resting inside of your trading range. Okay? Now, if you remember, in our past 2 episodes, I told you that whenever you open your chart, the first thing you need to look out for is to look out for the 1, 2, 3 pattern. All right? Now, take a look at this diagram. The lines, the black lines that you are seeing, let's assume that the black lines, all right, is your higher time frame structure. Okay? Let us assume that it is the 15-minute structure, which is your higher time frame in this case. Okay? Now, once you identify on your 15 minutes the 1, 2, 3 pattern, all right, which is your higher time frame, of course. Now, this is the 1, 2, 3 pattern. If you haven't watched those 2 videos, I ask you to go back and watch them before you come to this one. All right? Now, after you identify your 1, 2, 3 pattern, you need to identify the range, your trading range. Okay? Now, your trading range is anything. Your trading range is your high and your low after the break of structure. As you can see here, here is the break of structure. All right? Now, where is your high? This is your high after the break of structure. And this is the low after your break of structure. All right? So, your high and your low is your trading range. Anything inside of this place, in between your swing high and your swing low, is your trading range. Okay? So now that we have identified our trading range, the next question to ask is, what then is external range liquidity? Well, external range liquidity is any liquidity that is resting outside of this your trading range. All right? Any liquidity that is resting outside, meaning that the liquidity, any liquidity that is resting above this high, all right, or below this low, is known as external range liquidity. All right? Now that we have identified our external range liquidity, in the case of an uptrend, let me tell you, in the case of an uptrend, in my own case, the way I trade, the way I name them is this. Now, because we are in a bullish structure, all right, you know that in a bullish structure, like I told you in lesson 1, in a bullish structure such as this, you don't want to see the lows being violated. All right? You want to see the highs being taken out. In other words, the lows are strong lows and the highs are weak highs in the case of a bullish structure. All right? But in the case of a bearish structure, all right, the lows are weak lows while the highs are strong highs, and you don't want to see price break and close above the highs in the case of a bearish momentum. Okay, so now we have identified our trading range. We have identified what is external range liquidity. All right, now what is internal range liquidity? Well, internal range liquidity is any liquidity that is resting inside of your trading range. Any liquidity that is resting inside of your trading range. It's as simple as that, guys. All right, now if you remember in our last episode, I think so, in our last episode, I told you that you need to understand your major and minor structures. Now, this your trading range, this your swing high and your swing low, they are the major structures on your higher time frame, which in this case is the 15M. All right, now I told you the minor structures in the last episode. I told you the minor structures are the lower time frame structures inside of your higher time frame swing leg. Okay, now inside of that your trading range, you have this your minor structures. Okay, and this is the minor structures here. Now within these minor structures, you now have what is known as internal liquidity. Now let me show you the internal liquidity here. And one more thing before I show you what is internal liquidity, that you need to know that above every high and below every low lies liquidity. All right, you need to know that. So now let me show you the internal liquidity. I said internal liquidity is any liquidity inside of your trading range. Now this is internal liquidity here. All right, take note, this is internal liquidity. This also is internal liquidity. This is internal liquidity. This, all right, is internal liquidity. Okay, so you have all those internal liquidity inside of your trading range. All right, your external liquidity is the one that is outside of your trading range. Okay, now why is it important for you to understand this concept of external and internal range liquidity? Well, the reason being that after every break of structure, every major break of structure, all right, please take note of this, after the break of every major structure, price will certainly pull back. All right, price will retrace. Now there are 2 or 3 reasons why price will naturally retrace, but I'm going to tell you one of the major reasons, why price retraces. The reason why price retraces is because the institutions want to refuel, and in trying to refuel before they move in their intended direction again, is that they want to take out retail trader stop losses, and the only way they can do that is through the internal liquidity. All right, they want to purge the liquidity resting inside of your trading range, because they know that retail traders will place their orders there. You need to understand that the institutions will not move price until they purge your orders in order to fill their own orders. All right, so that is the primary reason why price has to retrace, to take out the internal liquidity before going to its intended direction. Okay, I want you to understand that. So now you can see we have identified our trading range, we have identified what is known as external liquidity, and we have also determined what is called internal liquidity. All right, now let me get to the rechart and show you some of the let me show you the examples of some of the things we have discussed here. All right, let me quickly see where we can start from. Okay, let's see this. Let's start from here. Let's see. Okay, let me make use of this. Let me make use of this. Now, the first thing you need to do, let me bring back our guidelines. The first thing you need to do is to identify your trading range. Okay? So now, we want to focus on this point here. This point. Can you see my cursor? We are focusing on this point. Now, let's identify the trading range first. Where is our trading range? Now, I use this horizontal line, okay, to mark out my low. That's your low in the market. All right? That's your low. And now, where is your high? Well, you move this horizontal line to identify your high in the market. All right? That's your high in the market. Why is it your valid high? Well, I told you for you to identify a valid retracement, because a valid retracement will tell you whether your high is also valid. All right? Now, you take your FIB tool from this low. All right? Use your FIB tool from the low, and then you go to the high and see whether it has retraced to at least the 50% FIB level. Remember, I told you that in our previous video, you need to be sure that your retracement, if it must be a valid retracement, it must get to at least the 50% of your FIB level. So now, as you can see, it is at the 50% of the FIB level. All right? Meaning that this retracement here is valid, and this high is also valid. All right? So this is your low. This is your high. Now, below every low, there is liquidity. You know, I told you that. Let's delete this out so that it doesn't confuse us. Now, this is your internal liquidity here, guys. Take a look. This is your internal liquidity. This point is your internal liquidity in the market. All right? Let's see. That is, we are talking about your internal liquidity within this trading range. Okay, sorry guys. Let me do something like this. Let me first, so that you can see this internal liquidity very clearly. All right? Let me do it this way. I want you to grasp this perspective. It's a very simple perspective, but I need you to understand it. Now, this is your high and this is your low. Remember, you need to see your 1, 2, 3 pattern. First of all, your 1, 2, 3 pattern. Now, this is your high, this is your low. But as this leg formed a 1, 2, 3 pattern, this leg and this retracement has not formed a 1, 2, 3 pattern. You need to wait for another leg to break the structure, to have your full 1, 2, 3 pattern before you can now begin to look for any entry opportunities. All right? And therefore, after it violated this high, it violated it to the upside. Now, where is your high? Now, this is not your high, guys. If you followed our drift on our past two videos, this is not your high. This is your high, guy. This is your valid high. So you move your horizontal line to that valid high. All right? This is your valid high. And now, where is your low? Your low is here. All right? So you move your horizontal line to that low here. All right? Are you following? Move your horizontal line to that low. Okay? Now, this is your trading range. You have now 1, 2, 3 pattern. All right? So this becomes your trading range. This is where we want to start looking for entry opportunities. This is where we want to see where we have internal liquidity within this your trading range. All right? You need to find where you have internal liquidity within this trading range so that you will be on the right side of the market. Otherwise, you will start marking everything as OB within this trading range. All right? Now, let's get to the lower time frame. Let's get to 5M, for instance, and let's see what happens within this trading range. Let's see how we can identify our... Let's get back there. Now, this is your M15 low, M15 high. All right? Now, we want to check for some internal liquidity inside of this your trading range. All right? Now, as you can see here on M5, let me zoom out a little. Here on M5, you can see price went up. This is not your high. All right? This is not your high. If you followed what we discussed in our previous episodes. All right, this is not your high. This is your high. Okay, so you mark out that your high and your low on your lower time frame, such as the 15 minutes. All right, let's use the fig tool to see whether that is a correct high and low. All right, now as you can see, price retrace to at least the 50% fib level. So this is your high and here is your low. All right, so this is your internal structure. This is your internal liquidity inside of this your 15 minutes, all right, range. This is your internal liquidity here. All right, now as you can see, price went up and violated this structure to the upside. Can you see the violation of this structure to the upside? I want you to follow me. It violated that structure to the upside, now creating another high that is known as a higher high, and price retraced to form a new low. All right, now is that low valid? If you're in doubt, use your fib tool. So I've identified to you that this is internal liquidity. All right, this is internal liquidity inside of this your M15 trading range. All right, so let's take this one out so that it doesn't confuse you. So let's take that out. Now this is your internal liquidity. All right, that's number one. Now price has violated structure here on your 5M and created another higher high. All right, and pullback. Is this a valid pullback? Well, if you're in doubt, use your fib tool to determine that. Let me use the fib tool to show you whether it is valid or not. Can you see that? As you can see, price retraced to at least the 50% fib level, meaning that this is a valid retracement. This is a valid low and this is a valid high. All right, so now this is another internal liquidity. All right, this is another internal liquidity, but overall on your higher time frame, look at your trading range on your higher time frame. Let me show you the overall trading range, because what I'm showing you here now is the M5 trading range. Oh God, sorry guys, sorry about that. Just a moment. Okay, so this is your higher time frame trading range. I want you to realize that this is your high and this is your low, this is your high. All right, so we are operating within this higher time frame trading range, okay, which is the 15 minutes trading range. Now this is your 5 minutes trading range. We identify the first trading range and we identify the internal liquidity. All right, we are now on the second trading range and we also have identified this as liquidity. All right, let me mark them out so that you don't get confused. I have told you before, this is your liquidity here. Now this is another internal liquidity here. All right, now we want to progress for us to see where we are. Now as you can see, price violated this high too. All right, price has violated that high. Where is your new high? This is not your new high. All right, this is not your new high. All right, this neither is your new high. It's not. Your new high is here. If you followed our previous episode, then you will understand. So let me take out this very trading range here and show you another trading range that we have now in your 5 minutes. All right, this is it. This is another trading range you have now. All right, take a look. As price retraced to 50% fib level, yes, take a look at it. It retraced to 50% fib level. I mean, it retraced to 50% fib level and even went deeper. This is a deeper retracement, and this is the type of retracement I like. All right, now as it retraced, all the places I've shown to you, as it retraced, all right, it took out internal liquidities. All these ones are internal liquidity. Look at it. Internal liquidity here. Internal liquidity here. All these ones are internal liquidity. All right? I want you to understand that. Inside of this your M15 trading range. All right? So when you want to look for trade setups, you must be aware that the institutions will take out internal liquidity, all right, in order to refuel before they move in their intended direction. I want you to understand that. They will take out internal liquidity. Now, how deep can they retrace before they continue in their intended direction? In this case, in their bullish momentum. How deep will they retrace? Where can you now look for a high probability OB? All right? Because any OB that is sitting on internal liquidity will be taken out, especially if that internal liquidity is outside of your trading zone. All right? If it is outside of your trading zone, it's dangerous. All right? How deep do you think? Where can you find a high probability OB within your trading range, given this internal range liquidity issue? All right? Well, that is where you need to seek for deeper knowledge, all right, about this market. Okay? Now, we are doing a promo right now, and we are giving 50% discount on our premium, on our VIP mentorship course. All right? So, if you want to cut short your learning curve, you can decide to take advantage of the promo that is going on now. Registration is already opened and is going to end at the end of this month. You can take advantage of the promo and get huge 50% discount. All right? So that you can upscale your trading skill. All right? And cut short your learning curve. Now, in our private trading room, our students know where exactly to look for high probability OB. All right? When price is retracing, they know where exactly they can get a high probability OB. All right? Now, but in general, I'm telling you that if you follow what I'm showing you here in this video, then you'll be able to make some good profits when trading the market. You will upscale your skill. All right? So these are your internal liquidity. Now take note of this. Any OB that is sitting on internal liquidity, especially outside of your trading zone, will fail. The institutions will take it out. All right? They will take it out. So do not mark your OB, all right, on internal liquidity. Any OB sitting on internal liquidity will be taken out. So what do you do with your internal liquidity? Well, if you want to trade from internal liquidity, you can do that by scalping. Maybe you are looking for about 5 pips profit, or target 5 pips target. Okay, that's one thing I want you to understand. All right. Now, for instance, for those who do not have the knowledge that I'm sharing with you right now, this is what they will do in the market. Let me show it to you, what they will do. Let me expand this price for you to see what they will do. The retail traders will do this in the market. All right? Just a minute. The retail traders will do this in the market. Okay? They will see this as a break of structure. They will see this. Let me show it to you. They will see this as a break of structure. All right? Can you see? Price broke structure to the upside with the candle body close. So they will say this uptrend is continuing, and therefore they will find an OB somewhere here. Take a look. This will be their OB. This will be their OB. All right? And as you can see, look at what price did. Price came, all right, took them out of the market. Took them out of the market. Why? Because they do not have the knowledge I'm sharing with you now. Now that was okay. What can they do? When price has taken them out, the price went up a little and they thought price was going to go higher. All right? Before you know it, price dropped, took them out of the market. There are those also who is okay. That's not a high probability OB, because they will look at this point and said, well, maybe this will be their OB here. They will place an order around this OB here. Take a look. They will place an order around this OB. Look at what the smart money has done. They blew through their OB. Why? Because this OBs, what they call OB, is sitting on internal liquidity. All right? Outside of your trading zone is sitting on the internal liquidity. They will be taken out. All of them will be taken out. Okay, some will say now, this is the last higher low before this break of structure. And so people mark anything. They do the wrong things in the market all the time. They will mark here as their OB. All right? Expecting price to come and respect this their OB and take them into the market. And look at what price did. All right? Price took them out of the market. All right? Price took them out of the market. Just a minute, guys. Just a minute. So price took them out of the market, and they are crying. They say, what is happening to me? They conclude that somebody is watching them, whereas their real OB that they should be looking for should be after institutions have grabbed all the internal liquidity, and then they can look for a high probability OB. All right? This is the knowledge that they lack. All right, guys, this is simply what external and internal range liquidity is. All right? This is simply what it means. Okay? This is what it means. So I want you to learn about that. If you find this video useful, please, you can give us a like, subscribe to our channel so that you don't miss any of these videos. All right? Subscribe to our channel and hit the notification bell icon so that each time we drop a new video like this, you'll be the first to be notified. Okay? Now, if you haven't joined our free Telegram channel, please do so immediately, because I am active in that Telegram channel. All right? Just check out the link in the description, and we have a Discord server. If you want a healthy traders interaction, then you can join our Discord server. All right? I will also leave the link in the description below. Now, like I said, we have a promo that is running now about our VIP mentorship course, and we are giving a huge 50% discount. All right? And if you want to shorten your learning curve, please do well to register. Registration is already on and is going to end at the end of this month. Take advantage of it and upscale your trading skill. All right, guys. I'll see you in our next episode. Have a wonderful week ahead.